Bosch, Deutsche Telekom, two of Europe's biggest tech giants are running validator nodes on this blockchain right now. Not investing, not exploring partnerships, actually operating infrastructure. And the token? It's down 90% from its all-time high, trading at under 30 cents. This is Fetch.ai, the project building autonomous AI agents that think, negotiate, and execute transactions without human input. Real artificial intelligence doing real work on the blockchain. Today, we are breaking down everything. The technology behind autonomous economic agents, the tokenomics with 2.7 billion max supply nearly fully diluted, the partnerships including the Artificial Superintelligence Alliance merger, how FET stacks up against Render, BitTensor and other AI tokens, and of course, the Millionaire math. Exactly how many tokens you would need at different price targets to hit 7 figures. But none of this matters without the right catalysts, so make sure you watch until the end as I explore these later on. I noticed many of you guys watch these videos but aren't subscribed yet. So if you're getting value from this, just hit the subscribe button. It helps us out and you won't miss the next one. Let's start from the beginning now. This is not a financial advice, always do your own research. Fetch.ai was founded in 2017 with a vision to build a decentralized machine learning network. Its core origin story revolves around creating a digital economic system where autonomous economic agents are key. Think of them as digital assistants. They can execute tasks, negotiate, and transact on behalf of humans, devices, or services. The founding team of Fetch is anchored by experienced tech minds. Humayun Sheikh, the CEO, was an early investor in DeepMind, which was later acquired by Google, whereas Toby Simpson, the CTO, and Thomas Hein, the Chief Science Officer, have background in AI and software. Their core mission is to democratize access to AI and create a permissionless smart infrastructure. The key technology model is an inter-chain protocol built using the Cosmos SDK. It uses a specialized proof-of-stake consensus mechanism and high-performance smart contracts to enable the deployment of those crucial AI agents. Ultimately, that's a layer 1 blockchain specifically optimized for AI operations. Now about FET's tokenomics, as they are truly central to its ecosystem. The max supply is fixed at approximately 2.7 billion FET, and the circulating supply currently sits at about 2.6 billion, meaning nearly all tokens are already on the market. This almost fully diluted state is a significant factor. See, when most coins are already circulating, new supply inflation risk is low, which can be bullish for price appreciation as demand increases. Moreover, according to data verified from Tokenomics and the official Fetch.ai white paper, the token distribution was designed with long-term sustainability in mind. Roughly 230 million tokens were reserved for the foundation, 133 million for private investors, and about 65 million sold publicly at the TGE. The foundation tokens had a 3-month lockup, then vest quarterly. 50% in the first year, 25% in the second, and the last 25% in the third year. The private sale tokens follow a similar pattern. Short initial lockup, then linear vesting over several months, ensuring early backers cannot dump immediately. Public sale tokens? Well, those were fully unlocked at launch, giving retail investors instant access while keeping foundation and insider allocations on a timer. There are also smaller allocations, around 200 million tokens reserved for community incentives, released gradually over 5 years, plus a few million unsold tokens that stayed locked for a year post-sale. And because of the 2024 Artificial Superintelligence Alliance merger, Ocean and AGIX tokens migrated into FET. This added over 1.47 billion additional tokens to the total supply. And that's part of why the supply structure changed so dramatically. The token itself acts as the fuel for the network. It's needed to find, create, deploy, and train the autonomous agents. Crucially, the network supports staking, allowing users to secure the network and earn emission rewards, and that provides a key yield incentive for long-term holding. Okay, what's actually happening on Fetch.ai? What is their performance like, and what about the growth? This is where things get actually very interesting, because Fetch.ai is working with Bosch, Deutsche Telekom, and IOTA to build the economy of things. Basically, IoT devices that talk, trade, and cooperate autonomously. Your electric car could negotiate charging rates with a smart grid, all powered by FET. They've built the Fetch.ai Foundation with Bosch and Telecom as validators, legit corporate giants to oversee governance, in my opinion. And in 2024, Fetch fully merged its operations with SingularityNet to form the Super Intelligence Alliance. While Ocean Protocol recently chose to pursue its own path and withdrew, this only brings clarity to the core ASI mission, combining Fetch's agents and infrastructure with SingularityNet's marketplace. Inside the ecosystem, projects like Agentverse and ASI Wallet show how these autonomous agents can learn, plan, and even collaborate with AI models. Think of it as the Web3 version of ChatGPT, but with a wallet, identity, and the power to make its own deals. Here's what nobody's talking about. Fetch.ai still has centralization vectors that could tank the project if mismanaged. First, the token distribution. We mentioned 2.6 billion tokens are already circulating, but the foundation still holds massive reserves. If the team dumps strategically or governance gets corrupted, that's price death. The vesting schedule helps, but it's not bulletproof. Foundation tokens vest quarterly, meaning consistent selling pressure remains. And as we already mentioned, the 2024 ASI merger added 1.47 billion tokens overnight. That's not gradual dilution, that's a shock to the system. It solved the SingularityNet versus Fetch competitive problem, but it also made the total supply harder to manage and gave more power to whichever faction controls the merged entity. Second, validator concentration. Yep, Bosch and Deutsche Telekom are running nodes, and that sounds legit, but if institutional validators start dominating the network, you've lost the decentralized part of the equation. Large validators can coordinate governance, votes, control protocol upgrades, or extract economic rent. BitTensor learned this the hard way. And third, the adoption risk. Having AI agents that theoretically can autonomously negotiate and execute transactions is cool, but real-world adoption, it's quite slow. Nobody's actually using Agentverse at scale yet. The economy of things is still mostly a white paper vision, and if real adoption doesn't materialize in the next 18 to 24 months, the narrative collapses and retail money moves to the next AI shitcoin. And finally, regulatory risk. Autonomous agents that execute financial transactions without explicit human authorization could trigger securities law issues globally. The SEC isn't thrilled about decentralized finance as is. Add AI making autonomous trades to that, it's a lawyer nightmare. Now you might ask, how does FET stack up against other AI giants like Render or BitTensor? Here's the truth, they're not really competing in the same lane. Render sells shovels for the AI gold rush. That's the GPU power. BitTensor trains the models that dig for the gold. But FET, it's trying to own the entire gold economy. The data, the models, the agents, and the infrastructure all under one interoperable network. FET's goal isn't to be a single-use AI token, it is to become the backbone of decentralized intelligence itself. And now before we get to the millionaire math, let's do a quick rundown on the price action of FET. Right now, FET trades around 30 cents, down over 90% from its all-time high of over $3.40. Brutal? Maybe. But if you bought at the bottom in March 2020, you would still be sitting on gains of almost 4,000%. So yeah, this isn't some dead project. It's just resetting before the next leg up, I think. But the question everyone asks remains, how many FET would you actually need to retire as a millionaire? Let's run the math. First, the pessimistic scenario, the bear. Let's say the market never hits the old all-time high again, but manages to push to $2.10. That's about 7x from here, and you would need around 476,000 tokens to hit that $1 million mark. At today's prices, that would be roughly $142,000. And now, the bull case scenario, the moonshot. If the Alliance delivers on its AI super network vision and the market rewards it, we could be looking at $10 per token. That's a 33x move, guys. At that level, 100,000 tokens would make you a crypto millionaire with an investment of just $30,000 today. And here's the crazy part. Even at $10, FET's market cap would sit around $25 billion, the same as Dogecoin. But Doge is literally just a meme coin. In the meantime, Fetch.ai is building an entire AI infrastructure stack. Alright, let's talk about what could drive this kind of growth. FET already is trading on every major exchange, so there's no issue with access to liquidity. It's one of the easiest AI tokens actually to buy, even for big players. Then you've got Bosch and Deutsche Telekom, two massive European tech companies actually running validator nodes on the network. That's real infrastructure backing the chain. And here's the big one. Fetch.ai and SingularityNet have officially come together under the Artificial Superintelligence Alliance. That means instead of 2 or 3 separate projects competing for attention, you've got one combined network, sharing data, AI models, and agent infrastructure, all powered by the same token. So when the next wave of money flows into AI crypto, this alliance sits right in the middle of it. No ETF yet, yeah? But if institutions start looking for exposure to decentralized AI, this is probably the first place they will go. The foundation is already there. Exchanges, partnerships, real companies running actual nodes. Now it's just a matter of how fast adoption catches up. But I'm curious to know what your thoughts are, so comment below. Based on the strengths of the ASI Alliance, what is the maximum market cap you believe FET can hit this cycle? And now that we're done, if this deep dive analysis was meaningful to your investment strategy, please like this video, share it with the biggest AI bull or bear that you know, and most importantly, subscribe so you don't miss our next Millionaire Math deep dive. Ciao!